Peace be upon you. Welcome to section number 8, the principles of insurance. We will take today general revision on chapter 1 and 2, the utmost good faith and the insurable interest. Question number 1, choose the correct answer. Number 1, the age of the insured isn't a material fact in the principles of utmost good faith. Examples of material facts: in fire insurance, the construction of building, the nature of its use, and the availability of firefighting equipment. The fire policy of a building. It isn't true. The age of the insured isn't a material fact in fire policy of a building. Number 2, health insurance. Health insurance, the age of the insured is a material fact. Marine insurance. Marine insurance are facts or material facts in marine insurance, nature of goods and the marine route, though the age of insurance isn't a material fact in it. Number 4, life insurance. Life insurance, age and occupation and medical history and bad habits, it's a material fact in life insurance. Our correct answer will be number 1 and number 3. So our option will be number A, 1 and 3. Question number 2, all of the following about utmost good faith is true except in insurance, the principle of utmost good faith is applied instead of caveat emptor. It's true. The principle of utmost good faith in insurance, the legal principle that governing the insurance contract is called the utmost good faith. According to this principle, all parties of insurance contract, the insured and the insurer, are required to disclose all material facts relating to the contract, whereas a higher degree of honesty is imposed on both parties to insurance contract. The legal principle governing most of the non-insurance contracts is caveat emptor. Let the buyer beware. According to this principle, neither the buyer nor the seller is required to disclose any facts or information the other doesn't ask for. The buyer is responsible for checking the quality and suitability of goods before purchase is made. The buyer has no recourse with the seller if the product doesn't meet their expectations and satisfactions. So disclosure in insurance contract, we use the utmost good faith, not caveat emptor. Number B, the insured only is required to disclose all material facts relating to the contract. We just say all parties of insurance contract, the insured and the insurer, are required to disclose all material facts relating to the contract. So the insured isn't only, the insurer also. Disclosing means to tell the truth and not to hide anything about the material facts. It's true. Disclosing means to tell the truth and not to hide or conceal anything about the material facts. You need the incorrect statement. It will be number B. The insured is only required to disclose all material facts relating to the contract. Number 3, in the proposal of Comprehension motor insurance, some of material facts that may help an underwriter assess moral hazard. The model of the car, the usage of the car, the age of the proposer, the previous losses. A material fact in motor insurance, the type of the vehicle or the model of the car is a material fact. The purpose of its use or the usage of the car, the age of the proposer, and driving record. The proposer of comprehensive motor insurance, some of material facts that may help the underwriter assess moral hazards, the previous losses. Number 4, the types of security precautions is a material fact in fire insurance, motor insurance, burglary insurance, none of the above. The types of security precautions is a material fact in burglary insurance, nature of stock, value of stock, types or type of security precautions taken. So burglary insurance is our true option. Number 5, which of the following about the act of non-fraudulent non-disclosure is true? The consequences of breaching or breaching, the breach, types of breaching, a breach of duty of utmost good faith can take one of forms: non-disclosure and misrepresentation, or fraudulent breach or non-fraudulent breach. Non-fraudulent breach and non-disclosure is an act of giving false material facts to the insurance company, done either innocently or negligently. Fraudulent misrepresentation, an act of fraudulently giving false material facts to the insurance company. Non-fraudulent misrepresentation, an act of giving false material to the insurance company done either innocently or negligently. So it isn't true. Non-fraudulent and non-disclosure, it isn't an act of giving false material and either innocently or negligently. Number B, an omission to give material facts to the insurance company done either innocently or negligently. It's our definition to non-fraudulent and non-disclosure. Applies to both the proposer and the insurance company. It isn't true. So our option or true option will be number B, an omission to give material facts to the insurance company done either innocently or negligently. Number A, it's the definition of fraudulent misrepresentation. If insurers were to provide indemnification for loss that were caused, which characteristics of value, insurable risk wouldn't be met. The loss must be accidental and unintentional. The loss must be determinable and measurable. The loss shouldn't be catastrophic, or there must be a large number of similar exposure units. the peril to be insurable or insurable perils. Insurable perils, the insurance companies to provide financial protection against certain peril. There are various essential conditions and elements that need to be fulfilled before acceptance any coverage. These conditions are large number of exposure units. There must be a large number of homogeneous exposure units. To determine the sufficient premium, or the number of homogeneous exposure units increase as the number of homogeneous exposure units increase, the more accurate prediction. So that isn't our option. Another condition, determinable and measurable loss. Determinable and measurable loss. Determinable as to cause, time and place and amount, measurable in money terms. To provide indemnification for loss that were caused, our characteristics must be accidental and unintentional, or loss should be fortuitous. The loss must be accidental and unintentional. Determinable as cause and time and place and amount. Money measurable in money or in monetary terms. The loss shouldn't be catastrophic. Perils to be insurable. The loss shouldn't be catastrophic. Question number 2, true or false? Without insurable interest or the principle of insurable interest, the insurance policy become almost gambling. It's true. We just say that insurable interest is essential for preventing gambling. The nature of goods is a material fact in marine insurance. It's true also, because a material facts in marine insurance, the nature of goods and marine route. If the insured installs an automatic sprinkler system to prevent serious fire damage, this action consider facts that require disclosure. It isn't true or false, because facts needn't be disclosed. Facts that lessen the risk, for example, the existence of a good firefighting system in the building, or installs an automatic sprinkle system to prevent serious fire damage. Question number 4. If the insured is a very important customer for the insurance company, the insurer can ignore the breach when discover it before occurring loss and continue with the insurance. The consequences of breaching: if discover breach before occurring loss, the insurer can cancel the contract from the very beginning, almost as if it never existed. Charging additional premium before occurring, imposing additional terms on the policy, ignore the breach and continue with insurance. Ignore the breach and continue with the insurance. So that statement is true. According to non-disclosure breach, the insured failure to give material information. Breaches or type of breaching, types of breaching. A breach of duty of utmost good faith can take one of these forms: non-disclosure. Non-disclosure is failure to give material information. So that definition is true. Number 6, according to misrepresentation breach, the insured failure to give material information. Failure to give material information is non-disclosure definition. Misrepresentation is the giving of false information. So our statement is false. Number 7, indemnity is the contract where the insured indemnified by the exact value of loss. It's true, because in general insurance there are total loss and partial loss. So the indemnity is equal the exact value of loss. General insurance like liabilities and health insurance and properties. Contract is a long-term contract. General insurance is non-life insurance. Non-life insurance is a short-time contract. It isn't true. While life insurance like annuity and death contract is a short-time or a short-term contract. So it isn't true. It's a false statement. Insurance is a financial protection against loss you hope won't happen, such as fire and auto accidents. Insurance, and the difference between insurance and assurance, we said that insurance is a financial protection against loss you hope won't happen. It's happen or not happen, or may happen or may not happen, such as fire and auto accidents. It is true. Number 10, group insurance plan usually has higher premiums than individual insurance plan. It's false. Individual's insurance plan has higher premiums than group insurance plan. It's the last question in our section today. I wish you all the best. See you at next time.